Hey everybody, welcome back. It is Wes with Pikes Peak Trades. Excited to give you another weekend market update. And wanted to also remind you that there's one more week of free blog postings and the videos that follow to summarize the week at the website, pikespeaktrades.com. Here's what Wednesday's midweek update looked like. My projection that we were ready for a short-term top. You can click on all the charts and enlarge those there, and you can see what I was looking for and what I've actually been talking about for a number of weeks. If you've been following me throughout the summer, was most likely a touch and a turnaround at that 200-day SMA here on the daily chart. We'll talk about weekly charts as well, and then looking for what I have as a minor 4 pullback. And let me X out of that and now get you to the SPX daily. And you can see we're doing exactly that. So we are on track for that. In the daily Discord, I give updates throughout the week, give trade ideas. We had a great trading day on Friday. We were actually ready overnight Thursday. And I'll talk about the short-term setup from a trading perspective where we were anticipating this move down. And now is we're at this point of decision is how much further down will we go? We've already reached near levels where a minor 4 pullback could be in place. I'll talk about how that might look different on ARKK and also for individual stocks. And at this point, I still offer to you a very low probability that this was just a bear market rally. I think this is fleshing itself out impulsively. And the worst thing that could happen for the bears, and they're still loud and proud out there, especially after a Friday reversal into the weekend, that this is only 3 waves up. So under Elliott wave theory, counter trend moves are always in sets of 3 or 7. If we pull back, find support, and I'll suggest some areas when we get into the details of where I think that could happen if it's not already in place, and we move up and make one more move, it is very hard to dispute that this becomes a 1, 2, 3, 4, 5. And under Elliott wave theory, we have motive waves or impulse waves that are part of main trends. In this case, it would be the kickoff of a new bullish primary degree wave. That must happen in a first movement of 5. And so that is what I'm projecting. I think it will happen into the fall. And then I think we'll get a nice yearly higher low attempt. And so that's a little bit ahead of yet where we're ready to project. But that is where we're going with this primary count. And I'll talk about, as we were ready to get into the weekly charts here, what we could look for to start to begin to change my mind. But higher time frames, and if you've been following me really since the end of the second quarter of this year, when we closed the end of June, strongly beneath this 8-quarter EMA, I sent out the warning that historically in previous bear markets, so we're going through the dot-com crash, and we're going through the great financial crisis, if we get a second quarterly print below that 8-quarter EMA, that is when the bad of the bad of the bear has turned itself in. But you look at when we were rallying in bull markets, we might have gotten 1 quarter below those EMAs, but we did not get a second. And I've got all of those circled here, and we are ready in about 6 weeks for that point of decision. So by the end of September, if we see the S&P 500 above that 8-quarter EMA, we have lots of historical evidence. You can take this all the way back into the 60s and 70s, that if we close above it, this is historically what is suggesting the end of only a cyclical bear, not a secular bear, a cyclical bear within a secular bull, and we could see price move up strongly for the rest of this decade. So we've got some cushion there on that close, about 120 points of cushion here down to right now about 40, 60. It's starting to flatten and even hook up, which is a good sign for a bull market continuation. So as of right now, looking just a couple weeks towards the end of August, bulls are doing what they need to do from a historical perspective to propel this market forward. We're looking at the weekly chart. We do have a potential weekly topping candle. That is a potential shooting star candle. And it would confirm if we move down lower next week. And so here's where I'm ready to talk about if we need to pull back further in this proposed minor 4. We have fib confluence and we have multiple EMAs, weekly and daily, that is right around 4,100. So I think that that is possible, that we could see more red next week. That blog post that I showed you in the middle of this week, I was projecting multiple days of potential correction. So there is lots of confluence support there on the weekly, right around 4,100. Back to the daily, so you can put your eyes on that. Is there support in here? There is. So we have the 34 EMA at 4101, the 21-day EMA at 4150. That's right in the middle of a typical fib zone, 0.236 to 0.382 for minor 4. Okay, now, at what point would I start to get worried? Well, under Elliott wave theory, in a fresh impulse, wave 4 can go all the way back towards the price of wave 1. Okay, but because this looks pretty clearly like a 5-wave move up, we should not expect wave 4 to trade into the price of wave 1. That's at 39.45. So that for sure would be alarm bells that we could actually just have seen a double zigzag move and we could get yearly lows. That's a long ways down there. Notice that would also likely coincide with the loss of the 50-day SMA. Okay, so we're far from there right now, but we just need to go ahead and talk about that just in case we see it. It would not be uncommon to see us go all the way back to 4,100. That'd be a very typical fib. I could even put the 0.5 fib on there. So at the 0.5 fib, we're still above that wave 1. So I don't think we're going to go that low. I think 4,100 has that confluence support on the S&P. Okay, so now let's get into the small time frames. We'll talk about where we could be at in the projection of these counts. Also give you an idea on SPX and XPY for how I traded the end of the week. So here we are early in the week here. So this is on Tuesday, and we had that end of day rejection and then the big gap down on Wednesday. So I wasn't positioned to catch that gap down. Didn't trade the middle of the week well because we had this big bounce, but that was just setting up that either you could call it a head and shoulders top on the 15-minute time frame. I like to call it either an Elliott wave 2 or B, depending on the projection. Either way, it is simply a lower high that we're then looking for an opportunity to get short. There was a lot of chop in here that burned some premium, but when we made a second lower high for the week, right at the close on Thursday, this was the invitation to think that we could be in a very bearish move down, and that is exactly what we were ready for. So we were short overnight, although we hadn't yet broken support. There was that double 0.618 setup that got us short, and it paid off big time for us on Friday. So now the question is, like I presented to you on the higher time frame charts, is this minor 4 wave done? And you're going to see in blue, there is a count that suggests it could, an A, B, C. Right now it's just 3 waves down. And within this C, it's a little bit more clear on SPY. It is possible that we have 1, 2, 3, 4, 5 waves down to complete a simple zigzag. So that's composed of 1, 2, 3, 4, 5 down to A, 3 up to B, and then 5 down to C. So there is a chance, and this would be, I think, a very surprising, very unpopular outcome. That minor 4 is already in place at a shallow fib on SPX. We'll look at QQQ in a minute. IWM and QQQ a little bit closer to those bottoming fib levels. But we also have a count that would extend minor 4, and that's what would take it down towards that 4,100 level. And that's that we're still in the middle of this wave 3 down. This also, by the way, is the same count progression as the very, very bearish counts out there. And I think you know what FinTwit accounts I'm talking about that are calling this a nested 1-2 down My projection is even if we're in that count, that we'll see a bounce and this will form a three-wave move to bottom that. Okay, now a little bit of just projection for where could we go Monday. So it's kind of uncertain here on SPX and SPY. Is this wave 3 over? And if it is, we could see a wave 4 bounce. So I've got that on SPX. It is possible that we could see a wave 4, and that could bounce all the way back under this wave 1. Okay, so bears don't want to see a bounce that puts price into the level of this wave 1, which is at 42.53. There would be a count adjustment that could give this a double zigzag, but that again is not ultimately a more bearish resolution. So if we do bounce that high, already the most bearish scenarios from those big bears out there is most likely not going to happen. We could withstand a little bit of a bounce underneath maybe 42.50 and then continuation here. In order for us to say with probability that minor 4 is in place, we're going to have to see a move that breaks this 42.53, looks like a small degree impulse up, and then a corrective higher low against the weekly low. That would give you some good risk reward to buy long in case minor 4 is already in. Okay, let's keep moving through because we certainly want to talk about big tech. And here we are comfortably within a minor 3 topping area. Tech relatively much more weak on the week. And you're going to notice, you're going to see that low on Friday right there at that 0.236. But if big tech needs to correct a little bit more, there is a cluster of support, not only fib, but moving average from about 312 to 316. So I think that would be a good target. That would coincide with that 4100 target on the S&P 500. Into the daily Qs, and you're going to see it's possible we have an ABC down, but I think moving more comfortably into that fib level, I think we do see a little more selling into midweek. And then what does that look like playing out on the small squiggles on the Qs? You'll see that fib zone if we bounce. Here's a possible fib zone. We could have an ABC up. And for to play this, which we actually played this bounce right here short, caught another 25% win after we'd already gone over 100% on puts. As long as this wave 4 stays under wave 1, so there's 326.36, there's some probability here to re-enter short to try to catch one more leg down. But just like the S&P, because we made that lower low at the end of the day in that last final hour, it's possible that wave C and minor 4 are already in. We just have to have more time and more price bars show us. Okay, let's move into the other indices before we come back to individual names. Certainly want to look at small caps. So small caps, the 50-week SMA across the board, I've also been calling for that as a short-term topping target for weeks if you've been following me closely. Just like the Qs, very close to that typical wave 4 area. There's clustering of support about 188 all the way up to 192. And there would be a warning. So if we lose a weekly close below 188, there is some warning that maybe we're going to increase a little bit of probability for the bearish red. But we've got to have a weekly close next week below 188. Into the daily, you're going to see that so far it's 1, 2, 3 down. That is a corrective move so far against what I think is that primary 5-wave uptrend. We could easily go lower. So we could move right into those daily EMAs. That setup is consistent with S&P, with the Qs. And so where are we at here? Now, IWM, always interesting. I always look at small caps as confirmation. It did not set a lower daily low in the last hour of trading. So that could mean that we've already bottomed here. It's possible. It could mean that A is in and we have a 1, 2, 3 bounce coming up. I've already talked about the bounce scenarios elsewhere. It could also mean that because we did not get that finishing low, that we get that move down right away on Monday, and then we can be looking for a bounce. So I could see it go either way because IWM did not make that lower low. It looked to me incomplete. I did decide to hold some puts over the weekend. So if we gap up and we move above the early afternoon high, you got to get out, because that could be either the bottom of the entire ABC for minor four. It could lead to a bigger bounce, and you don't want to hold short through a potential bounce all the way through here. We just want to see how Monday opens, but I think I've explained to you there was some reason here to hold a little bit short, and it will be, I think, very interesting to see how Sunday night and Monday opens. Also would mention, it's a huge week for economic releases. We've got a bunch of big name stocks reporting. NVDA is one. They report on Wednesday. Salesforce is another. We've got PMI, manufacturing and services, coming out Tuesday after market open. Lots of things that could be market moving, that could either set a minor four bottom if we immediately move down at the start of the week, or if we bounce and then get bad news midweek, could set that second leg. So again, we just have to be ready. And I hope that you've seen that from me throughout the summer, is flexibility and planning. We're not in this certainty of wave count. We use the evidence to create high probability, but we're always flexible, and we adjust to what we project as the most likely outcome. And I think you're seeing that we've got it all laid out here. Certainly want to talk about growth, because we just had a nasty week for growth. There were a lot of earnings misses and earnings warnings, and you see it was down almost over 14% on the week, almost 6% on Friday. So its wave count is forced to be different. So on the daily, it is forced into an overlapping leading diagonal. And you can see that look. One characteristic of a leading diagonal is that the line that is drawn between waves 1 and 3 typically overthrows before the reversal. And that is exactly what we saw. You draw that line between 1 and 3, we had an overthrow, and then when it moved under, man, it just kept going this week. So all the way through, from Tuesday through the end of the week. And what's now interesting is it has moved into not a wave 4 fib zone, but a wave 2. And because growth also bottomed, not in June, like the rest of the indices, but in May, this is of an entirely different degree. Okay, so each ETF and the individual stocks within them needs to be looked at uniquely. There's no way to force a wave 4 count, I think, with high probability to match IWM QQQ with ARKK. It is doing something differently. And I would propose to you that into the small squiggles, it is possible this ABC is done. So I'm offering that just like how growth bottomed earlier than the market in May, I think it's also possible that growth right in this potentially bullish fib zone. We've got the daily volume POC, we've got the lower BB. It's possible that we could see ARKK already have either finished or very nearly finished its wave C down count. It's actually projected really well. You go back to my blog post here from Wednesday, give me a chance to scroll down to find you here with ARKK. And you're going to see right in here that this has really projected well. So you're looking at the accuracy of counts. Man, you're just looking at continuation of projections. So we go from here and we go right to here, and look at how well that came out. I mean, that's almost tick for tick. So man, you want this kind of continuous projection on your side. After this week, there's no more free releases. This is kind of a free month for me here, but starting in September, I want you to join our premium service to get these kinds of updates. Okay, so there's the main indices and ETFs. I also think it would be important for me to show you XLF, just because financials are such a huge component of IWM and SPY. It is within 2 possible different wave 4 zones. So it is possible that this minor 4 is already bottomed. It's also possible that we have that smaller degree minute 4 that is getting close. If we lose this week the 0.382 for the minute 4 degree, I'll be shifting the degree to a minor 4. Okay, and again, the only concern there is if we trade into the high of minor 1. And that minor 1 is just above 33. So there's lots of wiggle room in here, weekly and daily support for financials to bottom as well. All right, so now let's look at the big name tickers. So Apple, and Apple is one. I think most people have been extremely surprised at how far Apple has moved up off its low. And it is just so rare for a stock to retrace off a yearly low this high and have it still be in a bear market. I really just don't think you can look at this objectively and say that this is bearish. But I am projecting the potential of more weakness. Typically, the big boys like Apple, Microsoft, Tesla, they're usually the last to bottom in the trend. So my overall theme here with this is the possibility that growth bottoms first, and then we get the lagging sell in big tech to finish out that minor 4, and then we move up again. And like I explained early in the video, this is 1, 2, 3, 4, 5, and you kind of essentially at that point you put all the bear counts to bed if you're not just so incredibly biased. So let's look into the small time frame, and you're going to see how there could still be room to work. This right here is the wave 3 of this move down. This is another reason why I thought it might be worth it to hold some things short, is I think 1, 2, we maybe haven't reached that 3rd degree zone. And Apple is a name that I do think has a lot more room to correct. One of the main reasons why I'm going with that, I think we sell more into the middle of the week. Let's keep moving with the big boys. We get into Amazon. It's also moving towards that minor 4. This has really been a slick count. That has just counted so well over the last few weeks. And then we can see there on the short term as well. We've got that fleshed out. And again, another reason why I think if there's an individual stock to look to short besides Apple, I think it's Amazon. So as long as any bounce stays below this wave 1, at 140.39, I think there's risk reward to your side, in your favor, to catch that next move down. Let's move into just on the daily into GOOG. Won't show you that on the 15. GOOG is interesting because it's already one that has potentially bottomed here in this wave 4. It is possible that if we lose this more typical fib, this can count as a leading diagonal. And so I would just offer that to you, that it is possible here that we're actually seeing something like this. Let me clean up those fibs for you. And we could see Google as far down as, say, 114, near the 200-day SMA. I'll put that in blue since it's my alternate count. And so that's a possibility, 1, 2, 1, 2 under that count there in GOOG. Certainly want to look at Microsoft. And just like Apple, just like Amazon, I think a little bit further to go. Once you lose after a really nice extended run and you've met high time frame daily, weekly, monthly resistance, you lose that 8-day EMA. In my experience, you almost always go back to the 21. That's right in that fib zone. So this is another one that could set up as a pretty nice short. This is counting a little differently though. I've got this as a 3-wave double zigzag. You could count this as a leading diagonal 1 down, and that would extend the fib a little bit lower. Okay, so let's keep looking at Tesla. And Tesla, another one that I've counted really well. Once we made this higher high, and I had told my group this intra-week, that I thought once Tesla makes that higher monthly high, that's when I thought the indices could correct. And Tesla went there a little bit faster. The main indices, mainly because of strength in Apple, Amazon, and Microsoft, took them a while to roll over. But that was a pretty good projection. And we're close. We're close to that minor 4 area. So we get in there into the short term. And here's another reason why I thought it was good to hold a little short. This to me looks like a bear flag. So I think we've got this making an ABC down 1, 2, 3, 4. And beneath here, this 50 period SMA, that's right at 900. It's also kind of a key round number psych level. We break through that lower flag. And I think just like Amazon, Microsoft, this is a really good short setup to get back here to that diagonal where the previous degree 4 bottom. And wave 4s love that. They love to retreat to the price area of the previous wave 4. And that fits right in comfortably with this extension, Y versus W, and also right into that typical fib zone. So I am looking for weakness in Tesla, possibly into the middle of the week. Okay, there's our big tech names. And because I spent so much time talking about ARKK, we've got to look at the big names within it. And Zoom is now a heavily weighted name. I believe it is now number 2 after Tesla. And so we're going to look at these growth stocks. And Zoom is interesting because I think the bottom occurred with ARKK in May. And we have a pretty clear 1, 2, 3, 4, 5 up into 3 down. And now the question is, will this next minute degree hold this low? Okay, so it doesn't have to, because this can be counted. This can be counted as an ABC down, but this is just highly interesting to me. I want to watch Zoom early in the week, and it's got earnings that are coming up here pretty quickly. I think this date is wrong. I think Zoom actually reports Wednesday or Thursday of this week. So I don't play names. I don't add a common stock long. I don't short stock. I don't buy options on names. I'm not a lotto gambler. I think that's just a great way to just be wrong. But I'm certainly interested in, will we see the July 15th low hold right near maybe a double bottom 0.61, and then how does it respond? Because it's key to the growth sector. We look at another name that reports this week, and that's Snow. I believe Snow also reports on Wednesday with NVDA. And if you want a name within growth here that I think has a wonderful setup, it's Snow. So 1, 2, 3, 4, 5 to 1, ABC down to 2, another move up to 1, and into that fib zone. So this week, if Snow can hold the 0.618 and right along with this 50-day SMA, I think this is a portfolio add. Not only if you want to play this aggressively with options, but this is a great look to add into your portfolio. I've been mentioning NVIDIA, and I do believe I forgot to load that up. So I just want to open it up right for you here, because they report Wednesday. And in NVIDIA, also very, very interesting setup. So this is very similar to both Zoom and Snow. So we see a wave 1, 5 clear non-overlapping waves up right into a 2 fib zone, and we've just done it again, right into that fib zone. So if we end up bottoming early, I think we're going to see the response in big names. This is an ABC down. You need to keep NVIDIA and Snow and Zoom at the top of your watch list, because they're just so crucial. NVIDIA is actually a growing weighted component within the ARK funds. So it's potentially, with that nested setup, ready to go. And I haven't fibbed this out here, but semis look pretty good. And if I fib this out here using my extension tool, we're talking about a wave 3 run that really could meet up here with our 200-day SMA all the way up there towards 230. So this would be a very typical fib move if we get that resolution into the fall. Okay, other names. There's still more I want to show you. ROKU, a highly weighted component within ARKK, important to the growth space. And if you've been following me for a while, you remember 2 weeks ago, I said, just give ROKU time. It just needs to pull back more. And it's now moving into that minor 2. It's already reported earnings, but we've got to watch that 0.618 as well. There's the possibility of a really nice yearly higher low buy here in a name like ROKU. Also, keep an eye on Square. So Square on the daily first is one that we're looking for a wave 4 into 1 to hold. It's a little difficult to get another count out of it. So if you're bearish here, and the majority of my feed is, they're saying this is just the ABC that matches those bearish counts that I showed you on the main ETFs. So it's pretty crucial here that we see Square hold this wave 1, 69.58. That would be the 0.618 for wave 4, along with the 50-day SMA. Okay, so that takes you through some of my favorite individual stocks that I'm looking at. If you're not interested at all in commodities, you can tune away now, but I am always keeping these on watch. And unfortunately, a really nasty week for metals and miners. You can see the rejection area on GLD, diagonal, MAs, volume POC, and it's now into that bottoming fib zone. So if you are bullish this sector, or even if you want to be bullish this sector, it is a make or break week for metals and miners. We need to see a bullish fib zone hold. Now, within that, we could still see a pullback to close the gap from July 27 to 28. So on the small time frames, you're going to see the possibility that we go and do that. We could do that early in the week. The paper futures traders love to push metals down over the weekend when they can. And so we just have to watch. The pattern that I would be looking for an entry is following what you see here, that we need to see a bottom in a bullish fib zone, a move up, a higher low. That's where you give it an attempt. But we've got a significant reaction zone that's going to be occurring right around 165, 166. And from there, if we set another degree higher low, that's where you take the possibility that we could actually get the follow through if we're within the white count. You'll see something similar on GDX. Now GDX is one that had really tracked well for me up until the rejection area about a week ago. You'll notice that this best looking inverse head and shoulder is now gone. When you have to slide this over, I got to get rid of my magnet setting here. So when you have to extend this out in time to try to keep this look, it's not a great look. So this isn't the best setup. We're actually not far from a fresh yearly low. And unfortunately, what happened this week, this isn't the best continuation, although it does still count as a leading diagonal. 1, 2, 3, 4, 5 into what I think is kind of a complicated zigzag. So we've got an ABC down, 1, 2, 3, 4, 5. Will this lower selling channel hold at the 0.786? So I still got a bullish eye here, but like I said, it's kind of a make or break week. I use AG, First Majestic Silver, as a proxy for the larger cap names, although these are still small companies in silver. And you're going to notice a nested count just hanging by a thread, kind of why I said make or break. We could absolutely see that August 3rd low break. And if we do, I think unfortunately we're going much lower in the sector. It's still holding that August 4 low. So if we can see a move back into that old selling channel, back above MA resistance, about 765, hold this. I think you want to take a shot against this if this weekly low holds. Okay, so those are the primary things I'm looking at within metals and miners. I did want to go ahead and open up XLE. I apologize for not having it at the ready, but it'll open up quickly here because this is one that I've just been anticipating being short within this count, and it just hasn't reversed. It hasn't given me the signal to do it. This, though, looks better as a three-wave move. 1, 2, 3, up into that weekly high, up towards that 0.618 fib. So I would still offer, although there's no short-term immediate short setup here, that this you need to have this on watch in case it does present. And while the energy names have just kept bouncing, I've avoided updating this count. But now that we've broken above here the August 1st high, this obviously has to change. This moves up towards that fib zone as this moves over. And let me get that fib there for you. So it's now actually more into a bearish fib zone here. But above this, above 83, probability reduces. So this setup here, it's got to happen pretty quickly. And now that we're all the way up here, we're kind of looking for the possibility of an entry like this. I like to track the 50 period, the 200 period, the 100 period, moving averages on the 15-minute chart, because those correspond to daily moving averages less than the 8. I think they're good trend trackers. We see a reversal under, a rejection in purple, and that's where you've got the opportunity there to get short. Okay, we're going to finish briefly with crypto, and you'll see the Bitcoin moving as we go. I had left this chart here just to show you that Bitcoin has lost its most bullish setup. And that was pretty obvious after what happened here on Friday. So we have to alter this. Now, we hold, which we have so far this weekend, we've held that July 26 low at 27.15, and we've got the possibility of a 1-2 bottom. Okay, if we lose that over the weekend, notice we've got daily volume POC along with the 0.618 fib. If we lose that, we start to get a little worried that maybe the start of the week is going to move more into a risk-off phase. I personally don't think it's worth trying to be a hero and take a long shot here, although you've got risk-reward against that low. That's pretty tight risk, about $500 worth of risk there on Bitcoin versus the potential to catch a 3 of 3. ADA, you're going to notice that it looks a little worse. It's lost that daily volume POC. It has lost the corresponding low. Okay, so unfortunately, this count that you see here is no longer valid. And what's also unfortunate about ADA is a leading diagonal count is also not valid, because this leg here would be required to be the shortest. So the only possible count here has to move to a lower probability expanded flat. So that too has to move over. And like I suggested in metals and miners, it's pretty much make or break here for crypto as well. XRP, you're going to see something similar. It does not have a higher high setup for a leading diagonal. So this to me is actually the worst look. This looks a lot more like a bear flag. And if I even put that pattern on there for you, I can show you what that's going to look like right through here. It's kind of there on the verge of a breakdown. So we lose that lower channel in XRP, and unfortunately, beneath all daily and weekly higher time frame support, it's looking like we could have fresh yearly lows. So I'm skeptical about being long in crypto. They're in prove-it mode, as are commodities. I think a little more high probability that we're on the right track here with the minor 4 count. So I'll leave you here with the SPY short term. I think I've hopefully laid it out for you very clearly, how we've progressed and how we've tracked really well. And again, let me just remind that what we're looking for to try to put nails in the coffin of bearish counts, 1, 2, 3, 4, and 5. We get that 5th and final wave up above the summer high. And at that point, I think we can confirm that we are, in fact, looking at the kickoff wave of our next primary bull. Okay, gang, so that's everything here for the weekend, wrapping up the week of trading that finished August 19th, 2020. Wish you all a great weekend. Remember, you've got one more week of blog posts and a video to wrap up trading next week. And then after that, things move back inside our premium membership. So wish you well, and we'll check in with you on Monday and give you an update after we see what the market wants to start the new week.